The Bank of England didn't surprise the markets today with any additional quantitative easing or an adjustment to its ultra-low benchmark rate of 0.5%. Now, they were citing inflation worries as the main concern for the economy. Joining me now on the phone to discuss the health of the UK economy is Paul Walia, a New York-based economist for Western Europe at Roubini Global Economics. Now, Paul, do you think its current policy is supportive enough, or are you amongst the economists that still think the central bank may eventually do more quantitative easing?
Yeah, actually for today, the Bank of England actually surprised us. We were expecting additional QE of around £25 billion over 3 months. So we are amongst the group which still expect that the economy needs more stimulus and the bank should support the rebalancing in the economy. And we do expect additional QE maybe over the future quarters. But then for more QE to come in the future, the bank would need to see that there is a significant negative shock to the economy. One potential could be the Eurozone worries, but then it will depend how things unfold in the future.
With the UK economy now in a technical recession, what's your outlook for the economy as we head into the second half of the year?
So we are bearish on the UK. We expect growth to be well below the pre-crisis trend this year and next year, and well below the potential growth forecast, the official potential growth forecast. And basically our view comes from, we think that muted consumer spending, which is a reflection of weak household income growth, sluggish economic activity in major export markets, as well as tight credit conditions within the United Kingdom, together with headwinds from the government's austerity measure, they underpin our forecast for weak growth in 2012 and 2013. Recently, we can say from December to March, the PMI surveys, they painted a more optimistic picture, but the PMIs, they declined in April. And though the PMIs are still above the expansionary threshold, the sub-indices on output and new orders showed that there's weakness there. Further, we believe that a reduction in work backlogs without improvement in the replacement rate of order books implies that there will be a slowdown in the survey data as well.
The UK manufacturing output rose more than expected in March after a steep drop the month before, although there's doubts about whether industrial recovery will indeed provide the boost to the economy that it needs. How likely is it that a rise in UK manufacturing output will continue on from here?
As I mentioned, that the PMIs, they were increasing and they did paint a more optimistic picture from, say, December to March. But then if you look deeper into the PMIs, there's weaknesses in output as well as new orders. So this is something which reflects what's going to happen in the coming months and over the coming quarters. Till now, the improvement was coming from a reduction in backlogs. The replacement rate of order books improving implies that activity would be slower. So in terms coming to manufacturing, we feel that manufacturing wouldn't be that robust, as you said it was in March. And another thing is export orders, like UK's main trading partner is the Eurozone. Around 50% of UK exports go there. So sluggish growth in the Eurozone and the re-intensification of the crisis there implies that it's going to adversely impact export orders for the UK.
In regards to the British pound, some analysts have grown quite pessimistic about sterling gains going forward. What's your view on sterling strength in the coming weeks and months?
It did depreciate after the crisis, and that was something which was supporting exports. But then a re-intensification of the Eurozone crisis means that UK will be seen as a safe haven, and that's how the pound did strengthen. So it would be an interplay of what the fundamentals are and how UK is projected by investors.
Paul, thank you very much for your opinion on the UK economy. Now stay tuned, viewers, to Dukas Copy TV because there's still plenty more coming up. Goodbye for now.